Good morning, welcome to the IG Morning Headlines. It is the 8th of May, I'm Brenda Kelly. We're seeing stocks broadly unchanged in London after the FTSE 100 closed at a 5.5-year high yesterday. The mining sector is up 1% after China revealed a higher than expected trade balance. Beijing announced a surplus of $18.16 billion when economists were expecting a reading of $15.5 billion. Now, questions have been asked on the factual nature of this data, and if the figures are in fact massaged, we could be looking to see if the first quarter growth figures were a little bit more than optics. Time will tell. German industrial production for March is once again surprised to the upside this morning with a rise of 1.2% versus the 0.1% actually expected. If you temper this with the recent IFO data from Germany, which saw business confidence sliding much lower, it is something to ponder, and ultimately I think we could see a lower euro, possibly sliding below that 130 level if we see any poorer data coming out of the peripheries. Nonetheless, this, along with some decent corporate earnings and of course the ongoing quantitative easing from various central banks, is driving the indices higher both here and abroad. Even when you ignore fundamentals for the moment, which we don't necessarily stack up, we're seeing volumes in trade not necessarily very high, and as trend followers we tend to believe that volume should confirm the trend. So for now, I think the heady rise that we've seen could look to correct at this point on a certain bout of profit taking. Standard Chartered announced an increase in revenue, but it saw a decrease in operating profit today for the first quarter of 2013. So we're looking at a share price drop back there today of around 4.74%, and it's trading at 1619 pence per share. Something to note is that we could be looking at a bearish head and shoulders formation on the daily chart, with the neckline coming in at the 100-day moving average at 1670p. So this could be something to actually look for in terms of resistance, with support coming in from the 200-day moving average, which is your neckline at 1560 pence. So look for any close below that level. Over in FX land, sterling has found the air a bit thin around that 156 and has dropped below 155 against the US dollar, and this is ahead of the Bank of England rate meeting tomorrow. Still trading in a bullish channel from those March lows, and I think that 100-day moving average coming in at around 1.5406 should provide some modicum of support. For info, 60% of our IG clients are actually short the pound at this moment. The IMF are arriving in the UK today as well, and this is the annual visit to gauge the state of their economy. So we can expect many headlines relating to the level of austerity in the UK and the possibility that the protected cutbacks may be having an effect on the growth that we're seeing currently. I'd expect to see some volatility in the pound if this disagreement between the IMF and Mr. Osborne escalates. For more information, please log on to Insight.